any losses incurred as a result. So now we are going to start our webinar right now. In today's topic, we will let you understand what is candlestick pattern combined with our MACD and RSI. So here is the assumptions before we discuss deeply about all of the candlestick pattern, MACD and RSI. So we need to understand what is the technical analysis first. So technical analysis, to explain in the layman's terms, is a charting. So in these charts, we're able to draw all of the line, support level and resistance level. Then we will also combine with the MACD. And then by utilizing all of this line, we'll try to find a very, very good entry point. So technical analysis is basically a chart. So normally we need to understand normally the price will take considerations of all news and fundamental, and then it will react into the market. So for example, as for now, from technical analysis, we understand most of the investor maybe will thinking the resistance level of very high, the very important price for gold should be 3045. With the combination of the fundamental, they think gold price should be continue going up. But what is the potential entry points for the gold? So you can monitor on this potential resistance level 3045, because previously we have been experiencing that after gold price testing on the resistance level start to drop back. So imagine if you don't have any technical analysis, we are not able to try to forecast what is the next level for the gold. But with these combinations, Fibonacci expansions, we understand this is a strong resistance level, then maybe we consider enter after successfully breakout. So we assuming the price of the movement will move in the trend. We'll try to analyze it in a long-term basis, maybe like the daily charts. And then after you have a basic understanding of the long-term trends, then you can try to move on into maybe 4-hour candlestick or the 1-hour candlestick to find a very good suitable entry point. You can basically combine with the most important fundamental news, and then by using the technical analysis, you can find your good entry point. And then why we are using the technical analysis is because we are trying to expect historical sometimes maybe repeat itself. So I give you one of the example. So imagine, let me see, for example, the BTC USD. So imagine this price, right? Previously, imagine the resistance level. Last time, H1 1-hour candlestick, you can notice every time, once the BTC reach around 84,000, it will consolidate and then drop back, and reach 84,000, consolidate and then drop back. So it tends to be explained that. So this should be one of the very important historical pattern. So every time the BTC USD hitting 84,000, it will start to dropping. So hitting again, it will start to dropping. So we are expecting from technical fronts, right? The historical trends maybe happens every time. Will be happens. So assuming now the BTC market trying to hit the 84,000, and according to the historical patterns, it might be dropping. So this is the power of technical analysis. By using the charts, we can tend to be understand from last time movement, how is the movement for the BTC. So what is the maximum price for the BTC maybe for the past few days. So you can just use the technical analysis trying to understand the resistance level. So you can have a better opportunity. So by using the technical analysis, we tend to pretend historical will normally happens itself. BTC is just one of the example. Or another example should be regarding on the gold price, previous movement around here. Every time gold price hit 2890, it tend to rebound, hitting again rebound. So this is our assumptions by when we're using the technical analysis and analyze the markets. So far is my audio okay? If yes, then I'm going to continue the webinar. Thank you, John. So yeah, so after we understand what is the importance of technical analysis of the charting, the usage of the charting, now we will try to let you understand what is the support and resistance level. Support and resistance level is not just purely a line, because I give you guys one of the big assumptions. So you can assume maybe you are holding a gold, maybe 1 ounce of the gold. 1 ounce of the gold, then if I ask everyone, how much do you think is this gold? everyone will have different answers. Some of you guys might be answer, maybe I think the gold should be worth around $1,000. Some of you guys might be thinking $2,000, $3,000, and $4,000. Because gold, it don't have any intrinsic value. It's very subjective. As compared with company valuations, right? If I think how much is Coca-Cola, for example, you can very easily to calculate the intrinsic value, calculate how much sales the Coca-Cola is having, and then we can come to a price. But for example, gold itself, it don't have any intrinsic value. That's why we need to understand what is the global investor think about it. So, support and resistance level sometimes will normally let you guys to have a brief understanding of what is the global investor think. So if they think this is a very expensive price, or they think this is a very cheap price to enter. So we can, by using the support and resistance level, we can try to understand some of the potential trends for the gold. So if I'm going to assume all of the support and resistance level for the gold, you can notice that from historical movement, when the gold price hitting around 2,785, everyone will think this is an expensive price, and then it will start to drop. So the next time when the gold price hit again 2,785, they will think it's quite expensive. So it might be also dropping. But in one case, any chances that gold price successfully break above the resistance level, it will show the buyer's strength remain very, very strong. So from all of this understanding, right, you can have a brief understand on what is the global investor think. Or I give you another example. So if you think you want to enter gold, but you're not sure during the periods of 2024 October until maybe 2025 January, in this period, you're not sure what is a good price for you guys to enter the gold. So you can try to draw in the support level. And from this support level, right, you can have a brief understanding on what is the global investor thinking. So they assume 2615 is a very, very cheap price. They can enter it because every time it reaches 2615, it tends to rebound. From here, be able to understand. This should be considered a cheap price that can be utilized as an assumption. So support and resistance level is just that you guys tend to understand what is the global investor thinking, and what is a cheap price or expensive price that will trigger some of the aggressive sell-off of buyers to enter the market. So the usage of support and resistance level is very important. Why we need to draw the support and resistance level, and what is the how can it relate to our main topic, candlestick pattern and MACD and RSI? Because in my opinion, when you want to go through some of the important candlestick pattern, maybe you can only go through when it's nearby the resistance level or the support level. So when the support level that a lot of people is going to buy it, you can combine with the potential candlestick pattern to determine this is a very cheap price, and then according to the technical analysis candlestick pattern, this should be the times for it to rebound. So when we when we want to use the candlestick pattern to do the analysis, it's not each candlestick you need to analyze on it, but my suggestion is you can try to analyze on the potential trends of the candlestick pattern when it's nearby the resistance support level. So you can actually, after you draw out the resistance support, right, you can save a lot of your time compared to you like go through each candlestick one by one. Like now currently, for example, it's forming a doji, maybe it's a time to drop. So it's a very time consuming and sometimes might not that precise. This is sort of an example. The candlestick pattern that we are going to discuss later. This is what we call the doji candlestick. And normally when the doji candlestick has been formed, right, it tends to be dropped back one, but it suddenly rebound. This is why it's quite important for us to combine the candlestick pattern along with support and resistance level that we will be also discussing later. So normally, support and resistance level, we would suggest you to maybe use H4 to day one. And then after you have a clear understanding what is the major trends, then you can try to utilize to analyze on H1 or even 30 minutes or 15 minutes. So H4 and daily, it just give you a brief understanding on what is the major trends in the market. So for new trader, what is H1, what is H4? Explain in the layman's term is H1 is maybe like 1 hour candlestick. So assuming when we are using H1, when this candlestick to be closed, it require 1 hour. Like H4, for each candlestick to be closed, it might be require 4 hours. And then day one is for 1 day for the candlestick to be closed. So if you want to have a clear trend, it's better for us to know a major trend in the markets before we go deep one by one. So after you have a brief understanding about what is technical analysis, what is support and resistance level, now we will discuss our key topics today. Candlestick pattern. Candlestick pattern is very easy for us to be understand only because there are only few patterns that we are going to cover today. We are going to discuss about the hammer and hangman for you guys, and then bullish and bearish engulfing candlestick, morning star and evening star. So you just need to memorize what is the pattern of this candlestick, and I will also show you some of the example when this pattern have been formed, what is the expected prospect for all of these asset classes. Simple one, the first one is regarding on the hammer and hangman. So actually it's very simple. Hammer and hangman, how can you determine is by determine on the body. This is the body of the candlestick. And then normally the shadow will be very, very long. It's like a hammer. So when you go through the technical analysis, right, like go through here, right, you can tend to find the potential hammer. So if you go through all of the charts over here, maybe you can notice on we do have one hammer over here. So let me show you the example. So here is a hammer. That's why it tends to be rebound back afterwards. And then you can actually combine with the support and resistance level one. So if I'm going to withdraw off the support and resistance, you actually can notice here is one of a solid support level because previously the gold price have been testing here. They break out the test and then they only increase back. So it's instead of like just going up, you can notice there should be some of the fluctuations over here. So we can determine this might be a very, very good support level for us to be focused, and then you can combine with this hammer candlestick. So it's a chance for it to be rebound. And then definitely later we will show you more of the examples so you can have a better understanding what is hammer. So remember what is the hammer pattern? It's like the hammer, a short body, and then a very, very long shadow. And then hanging man is just on the top. So it's like the trend is going up, then from a hanging man, it might be dropping. So hanging man, the pattern is also similar with the hammer. But definitely, you try to find out all of this candlestick pattern when it's nearby the support level. You don't have to keep going through, like for example, the candlestick one by one. So for assumptions now, maybe if the gold price form a hammer, is it the time for it to drop? We are not sure, but it's better for us to combine with the support and resistance level. You don't have to evaluate all of the candlestick pattern one by one. So here is the few example to make you clearer. So imagine the overall trends for this is downwards, and then afterwards the hammer has been formed. It's a chance for it to be going up. But what is best is here is a strong support level. And then you can combine with the RSI and MACD that we will discuss later. So a very simple one, when hammer is formed of this candlestick, there should be potential rebound on the potential asset classes. Okay. And then the next assumption is engulfing. Engulfing is one of my favorite candlestick pattern because we can find a lot of a good example that happens recently. So, or any interested products that you guys want to know about, I can also try my best to show you, find those candlestick patterns and show you. So one of the good analysis, right, recently that, okay, so before we start and find a very real life example, I will give a very easy explanation about what is engulfing. Engulfing is simple, it's like we do have two candlesticks. So one is sell candlestick, one is buy candlestick. So when there is a potential rebound, the bullish candlestick should be bigger compared to the bearish candlestick. So it's just compared to with these two candlestick size. And then when the potential rebound candlestick is bigger, means that the chances for it to go up should remain. So bull candlestick bigger than the bearish candlestick, and this should be a bullish engulfing. It might be rebounding back. So bearish engulfing is also simple. Imagine all of the trend is going up, but this is a bullish candlestick, but end up we do have a sell or the bearish candlestick. So when the potential bearish candlestick has been formed, then it's time for it to be dropping. So I show you the real life example, then it will be much clearer. But of course, this is not 100%. I will show you a good example as well as a bad example together. So maybe we show you the crude oil. This is a crude oil chart. So I will show you what is the bearish engulfing candlestick. You can notice that all of the trend here is going up, right? Until certain point. Sorry, I draw a nicer resistance level. Okay, so after you draw support and resistance level, and then we zoom in. So I give you one of the example. So you imagine here 77.35 is considered a very strong resistance level. And then bearish engulfing has been formed. You can notice this selling candlestick, right? It's much bigger than the bullish candlestick. The red color candlestick, which is the bearish candlestick, is much bigger than the bullish candlestick. So when this thing has been formed, right, there will be potential dropping. But of course, and this is another example. But of course, if you combine with some of the fundamental tools as well as the technical charts. So we also do have some bad examples. So imagine here, even though bearish engulfing haven't been formed, but it still managed to dropping back. So the reason why the coin are dropping back is because of the fundamental news. So technical front, it can only assist you, but fundamental front is also very important because even though technical charts is signed for the oil to rebound, but after Donald Trump become president, right, we need to look back to fundamental view also. After Donald Trump become the president, he's trying to impose a lot of tariff target on multiple countries, including Canada, Mexico, China, and Europe right now. So all of this tariff thing is going to affect the global economic outlook. So no matter how good is the chart, due to this tariff, it's going to affect global economic outlook, reduce the oil demand, oil price managed to be dropping back. So candlestick pattern will just enhance you, but not 100% correct. So I give you another example here. Here is a bullish engulfing candlestick. When testing a support level 66.60, then it managed to be rebounding back. So here is another example. Combined with a strong support level 6.60, managed to be rebound back. But of course, here is a bad example. So normally when this form, you better don't enter the market. First, wait for further confirmations. Even though like these have been formed, you still manage to rebound. Sometimes it will like that. But you need to have a good confirmation for you to enter. It's like you can wait until the bullish candlestick really bigger than the bearish. Then you only enter it. Like for this scenario, you better know that. So this is one of the example. Of course, they won't always show bullish and bearish candlestick pattern. It will only show sometimes. And then when you notice the opportunity is on it, then maybe you can consider on it. Here's a good opportunity. Here is also. You can notice the bullish candlestick is bigger than the bearish. And then here's another example. This is the bearish engulfing. The red color candlestick, which is the bearish candlestick, is bigger than the bullish one. Here is also another example. But a nice one is you really need to try to look through the support level, resistance level. Here, you can notice this is a very nice one. So even though here is already formed and it managed to drop back, right? But the scenario might not as good as here. Here is a very good confirmation. A bearish candlestick has been formed, bullish candlestick bigger than it. Sorry, the bearish candlestick bigger than the bullish, then it's dropping back. So sometimes scenario like that, it's better for us to maintain our wait and see. Okay, so the bullish and bearish engulfing candlestick are very easy for you to set. So two ways. First one is you need to draw support and resistance level first. Very important. After you draw it, you go through all of the nearby support and resistance level and see any potential candlestick pattern will be formed. So a few good examples also occurring over here. So imagine here is a nice support level, bullish engulfing have been formed. Buy candlestick bigger than the sell one, it going up. Here is also another example. So, but for example, like here, since it's haven't formed right, I would recommend you to wait first. Why is formed, then you only enter. Even though it's already rebounding back, but it's not criteria as like a bullish or bearish engulfing candlestick. So you can wait and see until this candlestick to be formed. Okay, so this is an example, and here is the real example for you guys to read and understand it. Bearish engulfing. The selling candlestick bigger than the buying one, that is dropping back. And then next candlestick pattern that we are going to discuss is Morningstar. Morningstar is also very simple. Bullish and bearish engulfing is like we try to compare two candlesticks, right? To see which one is bigger than each other. And then hanging man is like a very short body, a very long shadow. It's like this is the hanging man. And then this morning star and evening star. It's very simple. It's like a star. The body is very small, the shadow is also very short. So it's something like a very small one candlestick pattern. When this thing have been formed, it will also show some of the potential retracement. Let's see if you have any good example of it. And of course, really, if you have any interested products that need me to find the potential trends for you, you can also text in the box up. I will also try my best to answer you. USD CAD, right? You can notice it's a very nice going up aggressively, then it form a long panel and it's dropping back aggressively. So it's a combination of the supply and resistance level. Of course, the big trends on why there is a big movement for UK is also due to the Trump. So even though your technical analysis is nice, but also you also need to be focused on the fundamental. Let me see, we do have any good example for you guys to see doji or not yet. Just now I found one, maybe it's a crude oil. So let me zoom in for you. The previous time. This is a crude oil. You can notice here is a doji. The price consolidate around here. And then if you zoom in, here is the doji candlestick, a very small body and shadow. Then after doji candlestick before, it continue to be dropping further. But of course, we do have a lot of doji example, but kindly reminder, you better don't analyze all of this candlestick one by one. You only analyze the potential candlestick pattern where it's nearby the support and resistance level. So you only analyze that. Then instead of like every candlestick you need to go through. Therefore, this one is a strong resistance level, right? Then after it's been formed, you can try to eye on the potential retracement. Okay, and then maybe now it's one of the opportunity also. Trying to form a doji candlestick. Form previously, then consolidate, and now form again. So if this candlestick able to open close above 66.60 with a very small doji potential pattern, then maybe the crude oil price might be rebounding back. So you can eye on it, but of course, you can consider close your position after they break below 6.60. So now maybe it's a time for you to verify if doji is good or bad, since this is a very strong support level and combined with the potential doji candlestick pattern. But of course, crude oil recently is going to affect a lot of fundamental news. Fundamental regarding on a potential ceasefire deal between Russia and Ukraine. Just for information, Russia and Ukraine in this week, they will have a negotiation, a talks focused on a ceasefire. So this is the key things that are going to affect the oil price aggressively. And then Russia can consider one of the major oil exporter around the world. So when they are going to decide ceasefire, then the fears upon the supply disruptions might be reduced. Means Russia may be able to export more oil to other countries. Because previously Russia not able to export oil because a lot of countries limit it, boycott Russian oil. But once this ceasefire deal has been signed, the potential supply disruptions for oil might be no more. Russia can supply more oil, and when this thing happens, higher supply, the price will normally drop. So even though there is a potential doji candlestick that can cause oil price to be rebounding, right? But the major fundamental news are still hurrying in the market, which is the Russian and Ukraine. So you need to focus on it also, and then try to combine on the potential technical charts. Okay, so doji candlestick is very simple for us to understand. It's like a very small candlestick. So one morning star before potential rebound, and evening star, it's like dropping back. So after you understand all of the basic candlestick pattern, we'll try to let you understand the potential MACD also. The MACD is very simple. You can find it from the MP4, or you can also use the trading view and then trying to launch the potential MACD indicator. So I show you from the trading view first. Maybe we can try to analyze GBP USD because you do have something open today. So when I open this chart, you can notice I already have all the indicator here. Okay, so imagine I delete all of this indicator. So normally when you open a chart, right, If you like that one, no indicator one. So how can you add an indicator? It's very simple. Just add an indicator. Then you can simply search MACD. Then you can click it. So it will automatic form. And then another strategy that we will discuss also is regarding on RSI. So just click it. Then RSI will be also formed. But this RSI may be quite another. So you can notice MACD and RSI, you can easily find from this indicator. But those of you who are using NT4, it's also very simple. Imagine I clear this MACD RSI. So no more. So how can you find it? You go through insert, indicator, trend, or indicator, custom, and then MACD. Just click it. So once you click it, then MACD will be formed. So in this topic, we will discuss how can you use the MACD to combine with the potential candlestick pattern and do some of the trade. So now we will go through what is MACD one by one. So MACD is actually developed by Thomas Asprey in 1986. So the usage of MACD, you can go through three things. First thing is the histogram. The second thing is the crossover. The third thing is the divergence. So I will explain one by one. So the first thing is regarding on the potential crossover. So let me zoom in for you. So let me see a good example to show you what. Okay, so this is a potential crossover. You go through and look at the MACD line over here. Yeah, two lines. One is the orange color, another one is the blue color. Okay, so when you notice on this line, normally the orange line is above the blue color one, but until certain moment, the blue line cross over above the orange line. So when the crossover occurs, it's what we call the golden cross. The candlestick will might be also going up. And then another scenario is like afterwards, the blue line is above, right? Orange line is below, right? Then once they cross over below, it starts to drop back slightly. But the crossover compared to the MA crossover, right? I don't think the MACD crossover is like super nice. So normally you use the MACD, right? It's better for us to analyze on the histogram. Straightforward, simple. So crossover is just one of the strategy, but not compulsory because we do have a lot of bad example over here. So here you see it's already crossover. Supposedly if you drop one, because when crossover happens, if you like the trend reversal will be occur. But afterwards, it do not indeed be going up. So crossover, maybe you can utilize it as from MA line. MACD not recommended. But how can we use MACD? We can use two strategies. The first one is by determining the potential divergence, which will be discussed later. Or the second one, you can monitor on this histogram, the below one. So this is also very simple for us to understand. You can notice we do have two things. One is the green color one, another is the red color one. So from red color one, right, is the bearish momentum. So to explain in layman's term, this red color one, right, is like the selling power in the market. So when this red color becomes lower and lower, lesser and lesser, means that the selling power in the market has weakened or the bearish momentum has been weakened. So when the selling power in the market has been weakened, right, means that no much people is going to sell it already. The power already weakened, and there will be a chance for gold price to be rebounding back. Okay, so imagine if the selling power are going a lot and a lot, right? Which means that the selling power remains strong, and there will be chances for it to be dropping. So you can, when this is a below one, then you monitor. When this like more and more, then it's a time for you to sell. But when it's turn curve, can become lesser and lesser in this red color, then maybe it's a time that show that the selling power in the market weaken, and there will be chances for it to be rebound. And this is the buying power for the green color one. When the buying power becomes strengthened and strengthened, which means that there will be potential for people to buy it. The buying momentum is remain very, very strong, good, and there will be chances for the potential asset classes to be going up. So green color or the upper one is the buying power. And when buying power becomes lesser and lesser, means there will be chances for it to be dropping because the momentum, the bullish momentum will start to be weakened. Okay, So this is how we analyze on MACD. So I show you one of the example here. So it's the same histogram. So imagine this histogram become higher and higher. It become very strong. So, and this is a very strong. Suddenly power become higher and higher. Okay, but this is not the best thing, I think, in my opinion, because sometimes we do a lot of bad example. But what is best is normally we can try to use the MACD and try to determine the potential divergence. Divergence is great in my opinion because it's very hard for us to find. And once you find it, the potential for you to precisely predict some of the trend should be higher. So what is divergence? Divergence is normally you will use the MACD trends combined with the candlestick pattern. So by using the divergence, you have two ways. The first way is you need to monitor on the candlestick pattern, which is the price, and then you need to monitor on the MACD. So when will the bullish divergence happen is when you notice the candlestick pattern is going down, but MACD is going up. And when will you monitor on a bearish divergence, right? It's like when the candlestick is going up and MACD is going down. It seems like very confusing, right? But let me show you the good example. When we look at the chart, everything will be much easier. So you can notice. So when you are going to notice the charts over here, right? The overall trend for the candlestick is keep going down and going down in this region. But the MACD, this line slowly going up. So when this line turns curve, there will be potential for it to be rebounding back. So this is how we find the potential divergence, bullish divergence. And then bearish divergence, candlestick pattern is going up. But MACD, these two lines, the previous high is much higher than the current high. It's time for it to be dropping. Okay. So this is how we analyze as a divergence. And then now we show you some of the real example that happens just today. And we also prepare our key trade of the day, just follow the potential divergence things to help out. So you can notice this is the power steering chart, GBP USD, H1. So you can notice power steering just now just dropped aggressively. So why power drop is because you can notice, if I'm going to assuming this is a candlestick, you can notice that this candlestick, right, it is actually going up, but MACD here, right, is going down. So when this turn curve is around here, maybe it's a potential time for you to be consider your short position. So if you are going to go through our trade of the day article, so let me show you. The trade of the day article is like the article that we share out during, I think, 6 hours ago. So let me show you our analysis and then to explain why are we prepared like that. So you can notice when we prepare this article should be like 6 hours ago. The price is testing on 1.30055, but on this criteria we mentioned the bearish divergence have been formed, which we are expecting in short-term basis. Maybe the pound sterling might be dropping slightly, even though the fundamental price is quite supportive for the pound to continue going up, but maybe MACD can show some potential divergence. So when this thing can be formed, we are expecting maybe pound sterling will be dropping. And if you are going to compare with some of the risk-reward ratio, right? Imagine your stop loss position is very easy for you to set. Once they successfully break above 1.3005 around here, you can just close the positions. If not, you are going to have some potential profit zone. So that's why we try to prepare our trade of the day by using this idea. And then so far so good. So this is why we try to mention that the potential divergence sometimes is very easy and important for us to find the trend. So let me show you to see any potential example in the markets. Find it. And just as I mentioned, the divergence is not that easy. It's really not easy for us to find, but once we found it, maybe it's a very good time for us to be focused on it. So far, I think I only found one. Maybe the crude oil, no. Yeah, so far only one divergence from the charts. Or maybe here is a good scenario also. So I show you this is the crude oil charts previously. You can notice here from here to here, right? It's a downward trend, but here, even though it's not beautiful form, but it's quite you can observe that this MACD, right, going to the upward. So when this divergence will form, once this line turn curve, there will be potential chance for the oil to be rebounding back. But of course, it might be frustrating, but end up is still very, very good. Okay, so this is a potential. And maybe here is also another example to show you. Here is also another example, but not 100% nicely formed. So you can notice over here also, the candlestick going up, and then MACD going down. So the divergence will be formed. Later, we will try to see any chances for you, but now you have an understanding on how can we find the potential convergence. Then next thing we are going to discuss is RSI. RSI is what we call the relative strength index, and it's not difficult for us to understand on it. It's very simple. RSI have few lines. You can notice that 70, and then we have 30, and then the midline 50. So normally RSI can be utilized to predict some of the potential rebound places. So you can notice that if this RSI, the blue line, close around the 30, the below one, then it's what we call RSI have been entered the oversold territory. So when one asset classes enter oversold, means too much people are selling it already, then this already hit the peak of the seller. And maybe it's a time for it to be rebound because the seller might be declined. So when the RSI hit around 30, means that these asset classes have been hit oversold territory, and maybe it's a time for it to be rebounding back, and then it's already profit. So when it's hit 30, maybe it's a time for it to be rebound, and when it's hit around 70, means that this asset classes already hit overbought territory. When this thing have been formed, it might be dropping back. But of course, here we also show you some of the bad example. Even though RSI already entered the oversold territory, maybe it's a time for it to be rebound. But unfortunately, it do not follow the trend and continue to drop. As I mentioned, all of this indicator, there is no 100% precise indicator. You can try to combine all of these indicators along with the candlestick patterns together. So let me see, do you guys have any preference asset classes that you want me to be analyzed for you? Maybe let me see, gold price, difficult for us to find potential rebound on the place. Yeah, because it's already hit record high. But definitely, I will show you, you can notice, right? The gold is actually also forming the bearish divergence. So if you are going to look at the candlestick, it's going up, but the RSI, the MACD is going down. So there will be potential for gold to be dropping back. But due to the latest fundamental, we hard to predict because everyone are thinking the potential trade war, Russia and Ukraine, and rising Middle East tensions after Israel attack back on Hamas. All of this thing is going to support the gold price going up. But even though on the technical front, it's good for us to sell gold because of this bearish divergence. But you also need to understand the fundamental plan will not support it. And we also worth for us to be mentioned about the FOMC meeting later, which is also going to trigger a significant volatilities in the market. So MACD, RSI, candlestick pattern will just help you, but not 100%. So if you ask me like that, I would not recommend for you to focus on gold because of the possibility of volatilities that I mentioned just now. And maybe we can try to analyze all. Let's see if we have any good charts that can combine all the support and resistance level. Then I will show you more of the example of the variation Darwin, bullish and Darwin. So Hang this is Hang Seng Index, which is the China stock index. And you can notice here, after bullish engulfing before, Hang Seng continuing going up, and then this MACD have been trying to diminish the selling momentum. So it means that the potential asset classes will be going up. So imagine if right now, right, Hang Seng index, maybe I will use okay. PIBOR is another section that we will teach you about in future basis. But normally, PIBOR can be drawn when certain things happen. So after you draw the PIBOR of the support resistance will be nicely formed. You can notice that Hang Seng right now is actually testing on the potential resistance level. So you want to do some potential trend reversal, right? Right now not recommended, but you can try to wait because any chances this candlestick able to maybe forming a hammer or what, then it might be dropping back. So you need to wait for the potential opportunity for you to be entered by just using the support resistance level. So you can notice that after we draw the people, right, here is also another strong resistance level around here, right? So now the previous example around here, bearish engulfing, form, dropping. First scenario. The second scenario is here, dodgy candlestick. Testing and then form start to be dropping back. So if remember candlestick pattern, you can try to combine with support and resistance level. Instead of each candlestick, you need to monitor it. Like right now, this candlestick do not show anything. So it's better for us to wait until potential candlestick pattern like this to be formed. And this is a bullish engulfing candlestick. Okay. So I hope I give you guys a clearer understanding on what is technical analysis today in a very simple terms. And then, yeah, we hope that you're able to enhance all of your trading journey. And since we have time, we also will try to let you understand on normally how will we prepare our reports. Normally we will prepare our daily reports every day, right? So here is our potential technical analysis. We just utilize two things for expand. The first one is we are just using the MACD. The second one is we are using the RSI. So MACD, we try to expand it in the power of the seller. So you can notice that here we mentioned MACD have been largely diminishing bearish momentum. So the dollar have been showing some the selling power in the markets for the dollar already slowed down. And then RSI already entered the oversold territory. So maybe it's a time for the dollar to be rebounding back, which will call as a technical correction. So this is how we analyze on our charts. But of course, this is not the 100% analysis. We just try to let you understand on the current indicator and the current fundamental. According to the indicator, what we suggest for the several asset classes. The first paragraph is the fundamental news to let you understand what's going on in the market. The second paragraph will try to analyze with the RSI and MACD and provide you guys a resistance support level. So imagine if you are a new trader, you're not sure how to draw resistance support level, feel free to refer to our website also. Okay. And then we will also prepare the Telegram group for you guys. We also share the major news. So if you guys are interested, you can also feel free to scan the link and then follow our Telegram. Okay, so I think this is all our most important things today. Q&A sessions, anything you guys want to ask me? How do you know that this candlestick pattern can be used to determine whether the trend is going up or down from new growth? All right, so as I mentioned, right, candlestick pattern you can monitor when it's nearby the support and resistance level. So for example, the things that I mentioned just now, Hang Seng here, a very strong support level, and maybe when potential candlestick pattern has been formed, then it might be a trend reversal. Now, of course, you also need to combine with some of the fundamental updates also. So instead of go through the candlestick one by one, zoom in each candlestick and analyze it by drawing the support and resistance level, and then just look through the potential candlestick pattern nearby the support and resistance level, you can save a lot of time. Okay, I hope I answered your questions for Guru Hall. Any more questions that you guys want to ask before we end our webinar? I also noticed a lot of you guys have been asked, will the recording have been shared? And then will the PPT will be shared? Yes, the answer is yes. We will also share with you guys in 1 week after the webinar. And then hello Chandra Khan, long time you again. Good to see you. All right, so I assume no more questions from you guys. If no, then I think we are going to end our sessions. What is the best time frame do you think is best for trading? To be honest, I think H1 or H4 is very good. Because if you are going to use like 15 minutes, 5 minutes, you can, but it will have a lot of noise. So imagine just a very small fundamental is going to affect the big movement. But if you are going to use a longer term, like day 1 or H4, the fundamental that is going to affect on it should be more solid instead of a noise movement. Go sell positions. A good question. Okay, so for gold analysis, right, I'm going to teach you right now, because now gold already hitting the record high, right? And then we're not able to draw off the potential support and resistance level. So when this thing happen, right, what can we do? So here, I'm going to show you some trick. You can actually draw the Fibonacci expansions of the indicator. So after you draw the Fibonacci expansions, the support and resistance level will be nicely formed. I show you that. So imagine if you automatically form around here, you can see. So if you ask me what is a potential level for the gold, according to the Fibonacci expansions, not me, this indicator has been suggest that there will be chances for gold price to maybe can going up until 3095. I know it's a very far position, but of course, technical wise is technical wise. Since this is a nice breakout, then maybe the chances for gold to going up should be a little bit higher. But technical wise is technical wise. We do have a solid, a very important fundamental update later that you must be focused, which is the FOMC thing. And then we also not sure Russian and Ukraine ceasefire deal will be how. Last time they think this is a very good thing that can cause gold price to drop if the ceasefire deal can be signed. But what if they don't? Like the Hamas and Israel things, they agree to ceasefire, but just after a few weeks, the war start back. So technical wise is technical wise, but you still need to bear with all these market fundamental, market volatilities. And Peter asks, is there a direct correlation between gold and US dollar? Actually, yes, but it should be normally negative correlation. So when dollar going up, gold price will be going down. When dollar going down, like currently, gold price will be going up. Because investor will normally use dollar to buy gold. So when dollar drop more, right, when you buy gold, it will be much cheaper. Okay, so I hope I answer your questions for Victoria. What is best to try Forex or crypto? Actually, it depends on the current fundamental. In a short-term basis, maybe gold price, the Forex should be the major asset classes, the high volatilities in the market. And crypto maybe next, because as for now, right, you can be noticed, the trend for the BTC USD consolidate, they don't move around. Because as for now, Donald Trump do not focus on crypto markets. Donald Trump focus on potential trade war, which is going to affect the gold markets. Donald Trump also focus on what? Potential tariff with China, and then they focus on the Russian and Ukraine ceasefire deal. All of these big capitalized and fundamental in the markets, right, will normally affect the asset classes such as crude oil and then the gold prices. So for the current scenario, this should be one of the things that we can be focused. There is no best asset classes for us to trade, but there will be one suitable asset classes for us to trade in a different time zone. Imagine if we are going to focus on crypto before the Donald Trump win the elections, how Donald Trump promised he is going to help the crypto markets, and that caused the crypto markets go up even more than 100K. So during that period, maybe investors will ignore gold, ignore crude oil, and will focus on the Bitcoin. So there will be they don't have a very best to trade like Forex or crypto. It's best for you to understand the current situations in the markets, apply the current fundamentals to see during this period, what is the major classes that we can be focused. I hope I answer your questions for Mr. Any more questions before we end our sessions? All right, so it's always good for you to understand more asset classes, especially when you trade with like this. We do have a lot of different kind of asset classes for you to be focused. It's always good for you to have a greater exposure. So imagine now, US and China might be having a trade war, and then China might be also launching a lot of stimulus plan. And this is a news that will also relate to Chinese related stock. Like Hang Seng Index is also something that you can be also focus on. So there will be not a best asset classes lah. So you need to find your suitable timing. Okay. All right. So yeah, if no more questions, then I think we are going to end here. Thank you everyone for your time. Have a good day, and thank you so much once again for supporting us in Q Prime. And we will definitely run more webinars soon and see you soon. And if you want to have some market updates, you can refer to our website, or you can also follow our Telegram group. Telegram group should be more active now. So we're posting the major events that happens in the markets. Once again, thank you so much for your support. Yeah, we are going to end here. Have a good day.